My name is Derek Hartman. I am also here with Mike Walsh. Many of you know us from YouTube or other social media, and we're super excited to be dropping some knowledge with our friend Natalie Goldstein, who is the CEO and founder of MyExpatTaxes, which is the co-sponsor of today's webinar, and she is an expat herself and an IRS enrolled agent, has tons of knowledge to share with us and answer all of our questions about what it's like to live abroad and pay taxes to the US. Welcome, Natalie.
Hi, everyone. I'm Natalie Goldstein, CEO of MyExpatTaxes, and I'm really excited to be here. I think, Copenhagen, I've only been there once, but it was super nice. And Denmark is a great place. I think it's pretty similar to Vienna, and that's where I am based. And my story is long, but I'll shorten it for the purposes of this. But basically, I'm from California, where it's very sunny all the time. And somehow I am now in Vienna, where it's gray and rainy outside. So I'm a little bit regretting that decision at this exact moment. But once, spring and summer rolls around, I'll be very happy again. Just the periods of November throughout March is kind of sad and gray on this side of Europe. With that being said, the other parts about being an expat, which is a little sad and gray, can be your taxes as an American. And that's where I come in. So as a CEO of MyExpatTaxes, I also realized I had to file US taxes while being abroad. And that was a huge struggle for me, right, when I first moved. And at the time when I moved, there was no good resources out there. I had tried to use the US-based tax softwares. I tried to use some firms that promised that they knew how to do expat taxes. Instead, somehow on my tax return, it said I lived in Australia and not Austria. So, basically you can understand the pain that I went through and why I decided to create MyExpatTaxes, which is the leading tax software for Americans abroad, and filing your US taxes back to the country that you don't live in anymore.
For a lot of our listeners, we've had the same the same complaint. I think some people even wonder, why do I need to pay taxes at all if I'm not even working or living in the country itself? So while we're waiting for questions rolling, we did get a few in DMs and a few in other forms of social media. So I'll fire a few at you, and maybe you can maybe it will also generate some new questions. But one person, was Trevor in Aarhus, said, I own a business in Denmark, but I am American. Can this have any impact on what I have to report to the US? And I'm usually not even finished my business taxes here until June. So will that impact me?
When we talk about business, there's two types of different businesses. The first one is the most common, is if you're self-employed. And if you're self-employed, you're a freelancer, you don't actually have a company incorporated, then that is fairly straightforward on your US tax return. You'd be filing a Schedule C. You're saying that, you are a freelancer, you do have a business abroad. You're probably also disclosing it as a foreign branch, right? Just because the IRS is really weird, where they think because you're American, your headquarters must be in the US. And if you somehow work abroad, even if you live abroad, then you have a foreign branch of your business. So don't ask me why, but that is the ways the rules are written. So you would be filing your Schedule C. You would be having another form called 8858 in your tax return for your foreign branch entity. And then the kicker is to make sure that you're not paying into US self-employment tax unless you want to. Right, and I can get into that, but you would be claiming a totalization treaty on your tax return to ensure that you're only paying into one social security system on your self-employment income. So that's kind of how you file the US tax return. It's okay that your business taxes aren't done until June. You can, of course, just file an extension until October 15th of the following year, and then you have a lot more time to secure so that you can finish up your US taxes while you're finishing up your local taxes. So that's kind of version one of being a business. The second one is if you actually have an incorporated company. So you actually have a limited liability company in Denmark. That makes it a lot trickier. So you will have to file Form 5471, and this basically says, okay, this is my company, this is all of, the revenue and expenses that my company has. This is any distributions that my company makes to me as either a shareholder or as an employee. And that can get a lot trickier. Of course, we can support you in any of these scenarios, whether you are a freelancer or you have a limited liability company. You can use MyExpatTaxes and be able to file your US taxes knowing that, everything is accurate, you have all the forms you need, just because these extra forms that are needed can be a little bit, we call it high penalty forms. So the IRS does like to scare people and say that if you don't file these forms, there's a $10,000 penalty. I haven't seen them enforced for these forms specifically, but I just put it out there that these forms are something you don't want to, mess around with too much.
You mentioned in part of what you were talking about the Social Security piece, and we actually have a question from Beverly, New York, asking about Social Security. I think on the podcast you mentioned about being able to contribute to Social Security while you're living abroad. How should people manage being able to either contribute to the U.S. Social Security system? Is that an obligation? Can they not do that when they're abroad? What are the rules for Social Security for U.S. citizens?
Mm-hmm. So it really, as with everything, and don't get mad at me because I always say it depends, because it really does, but a couple different scenarios. If you are still working for a U.S. company and you're still a W-2 worker, but you're living abroad, you're a remote worker, you're probably still contributing to Social Security because you just automatically get Social Security withheld from your paycheck because your U.S. employer will automatically do that. You can ask them to stop doing it, but most will automatically do so. So that's one way to contribute if you're abroad. Another situation is you're an employee, you're not working for a US company, but you're working for a Danish company. They are not going to withhold US Social Security taxes for you because why would they? And they have no access to even give that to the US. So if you are an employee in Denmark, there's no paying into the US Social Security system. You don't pay Social Security taxes to the US, you only do it to Denmark, period. And there's really no way to contribute otherwise to the US. Now, if you are self-employed, it makes it a little bit different because when you're self-employed, you're not withholding Social Security, or your employer, which is you have to decide how to withhold, Social Security taxes or to pay them. And so in that case, generally what I said is you would not pay to the US, right? Because you don't want to be double taxed. And so you would be claiming the totalization treaty in Denmark. And then that would mean you're only paying into the Danish Social Security system. And so you don't have to pay the 15.3 self-employment tax if you're self-employed. However, if you wanted to, you could, because you could obviously file your US tax return, admit that totalization treaty and say, no, I want to pay the 15.3% self-employment tax. I want to contribute up to 4 credits per year based on my self-employment earnings. And then you could actually still contribute in that way to the US Social Security system if you're living abroad. Keep in mind, you generally need to have 10 years worth of working, so 40 credits in order to draw from Social Security. I know they're changing that a little bit, but I just want to say if you are anywhere close to retirement, or maybe if you've just worked in the US a little bit before you moved abroad, create a Social Security benefits account. You can do it online. You'll go through a few hoops, but you can do a video authentication so that even if you don't have the mortgage or the US credit card to do the identity check, you can go through a video option, and I've done it. It's pretty smooth. And then you'll automatically see how many credits you have and how many credits you're missing. And so you can actually do a little bit of planning to say, actually, I want to retire in the next 10 years. I have maybe half of my Social Security benefit credits in the US. Let me start getting some self-employment income so that I can still contribute, so that I can get the maximum, Social Security benefits that I'm allowed with the 40 credits. So very long answer because as I said, it all depends on the situation you're in and what you want to do. But that is an option. You don't have to, but it's an option that you can do.
When you're a W-2 employee in the U.S., they're withholding for both Social Security and Medicare. Is the same 40 credit rule or having to have employment for 10 years to have eligibility for Social Security true for Medicare as well? Because there may be cases where people are comfortable not contributing to Social Security, but they do want to retire back in the U.S. and be eligible for Medicare benefits.
When we're looking at self-employment tax, they usually roll kind of everything together because it is, this 15.3% is Social Security and Medicare kind of combined. I would assume the rules are similar. I am not a Medicare expert on that one, so I'm going to have to pass a little bit on that answer. But with it being said that generally when you're paying the self-employment tax, which is a way that you can basically still contribute while being abroad, then you would be technically paying taxes for both of those reasons.
Jen, who's originally from Minnesota, wanted to know, do we get automatic extensions from the US in the process? And when does that happen?
Yes, so the IRS is really funny about their automatic extension. So if you are an expat, you don't have to file your tax return until June 15th or June 16th this year, just because the 15th falls on a weekend, and it's an automatic 2-month extension. You don't have to do anything to get it. However, technically, you should include a statement in your tax return to say that you're claiming it. So I don't know if it's that automatic because you still kind of have to do something. Obviously, we include the statement for you when you file your taxes with MyExpatTaxes. But if you're doing it yourself, just make sure you have a statement that say, hey, I am living abroad. I am claiming this 2-month automatic extension. With that being said, it's a filing extension, and filing does not mean the same as paying. And it's a chicken and egg situation where obviously you need to file to know how much you have to pay, but the IRS expects you to pay by April 15th. Otherwise, they're going to start, giving you some interest. And so what I always say is if you have U.S. source income, or if you have income that you don't necessarily pay taxes on, maybe in Denmark, then you should think about filing by April 15th. But if you only have Danish income, if you pay, because Danish taxes are really high, if you pay your Danish taxes on it, most likely you're not going to owe any type of US tax. So you can definitely wait until June 15th. Or what you can do is even file an extension to October 15th. But the October 15th extension is not automatic. You do have to file an extension. And if you have an account with MyExpatTaxes, basically once we get close to June 15th, we'll just file an extension for everyone to be safe. You can also try to find a different software to file the extension for you. It's Form 4868. You can also do a trick where you basically go on irs.gov/payments and then you pay $1 extension, and that will also get you the extension. But you have to do it by June 15th or by June 16th, your original deadline.
And on the filing side, so another question that we had coming in from before is one of the confusing things is around residency requirements. For example, there's the 330-day rule. If you're abroad for 330 days from the U.S., you can be considered living abroad. There's also a residency that if you can prove that you're domiciled or resident of a foreign country, even if you're in the U.S. for a period not that long, you could be eligible. What's the requirements for you to be able to file as living abroad and be able to take advantage of the foreign tax benefits?
I think that is a misconception there, because if you are living abroad, if you're paying taxes abroad, you can claim the foreign tax credit no matter how long you're abroad for. So the two tests that you mentioned, that's specific to the foreign earned income exclusion, and that is one of the main expat tax benefits. So what that says is basically there's two tests and we have to pass one of them. So in the year that you first move abroad, you're probably not moving abroad on January 1st of that year. You're probably moving abroad, somewhere else during the year. And so in that year when you first move abroad, you're probably going to be looking at trying to pass the physical presence test. And that's the one that's a little bit trickier, the whole 330 days within a 12 consecutive month period that starts or ends in the tax year. To simplify it, this is what it means. You moved abroad on June 15th of 2024, and you want to use the foreign earned income exclusion on your 2024 tax return. That means that you can't file your 2024 tax return until June 13th or June 14th, 2025, because you have to prove that you've been abroad from the day you moved, so June 15th, 2024 until June 13th or June 14th, 2025, that whole entire year. So that's the 12-month period. And then obviously you should have been abroad for 330 full days, so you should limit your US travel. So once you pass that and you've been living abroad for a full tax year, so you've been living abroad for a whole January 1st to December 31st, so the next year, you use the bona fide residence test. You're registered as a resident in Denmark, you pay taxes there. You can travel back as much as you want to the US. As long as you are still a resident in Denmark and you're still paying taxes there, you just use the bona fide residence test and you don't need to worry at all about, your US travel. So the physical presence test is normally just for those that move the first year. And the only other exception is, of course, if you're a digital nomad or you're working for an international organization and you're not paying taxes where you live, then you will always be on the physical presence test, and then you'll always be having to watch your travel. For example, maybe you're a Fulbright student that is in Denmark and you're working in Denmark, but you need to watch your travel because you are, kind of coming in the middle of the year, and you have to make sure that you don't travel back for summer and Christmas, because then you can be possibly in the US for too long. So long story short, first year you move abroad, watch your US travel if you want to claim all of the benefits. If you are living abroad for more than a year, if you're paying taxes, if you're registered as a resident, you don't have to worry about your US travel. It's a lot easier. You can use the foreign earned income exclusion, you can use the foreign tax credit, all fine. travel as you wish. Obviously, just keep a little bit of documentation on how you travel, because if you do use the form, even though your US travel doesn't really impact you, you do have to note the dates that you enter the US and leave the US.
It's good to know. So a lot of people do that, especially in that first year.
Yeah.
Can be
The first year gets
very
tricky, so you really have to watch it. And what we do is we just ask for when you first moved abroad and what dates you travel, and then our software will find that 12-month period, and people will start filing with us, and we'll be like, actually, your return's done, but you can't e-file until this date because we want you to be qualified for the foreign earned income exclusion. So you just have to wait a few days or a few months so that you can file and get like the optimal result.
Are there any common mistakes or any like recommendations on that note as far as people who maybe this is their first year filing from abroad, or maybe they're planning to move to Denmark or abroad this year? Anything that they should need to know in advance of that, or common mistakes that you see in that first year or period?
One is basically, the first thing is just, if you do have US source income, right, your W-2 is probably not going to withhold enough taxes. So if you have W-2 income and then you have foreign income, right, so you work for a company, you have a W-2 job, and then you quit it, and then you move to Denmark, and then you start working for an employer there, obviously there's no federal taxes withheld on the US side. So it can be a little bit of surprise to some folks when they first move abroad that they have a bigger US tax bill, right? Because their W-2 is not withholding on their foreign income, of course. I think another mistake that can happen is people that maybe automatically just go into the foreign earned income exclusion. They just take the first expat tax benefit there is. It's not terrible, but it's one of those that if you use the foreign earned income exclusion right away, you have to kind of stay with it. And then if you decide you want to get rid of it, you want to go to the foreign tax credit, then you basically have to revoke it for 5 years and you're not allowed to use it again. So I always think that if you can get away with not having to use the foreign earned income exclusion, use the foreign tax credit instead, because it's just a lot more flexible. And then the last one I would say, the biggest mistake is contributing to your IRA. To just understand what it means, and this is not just for first time folks, it's just for expats in general, is if you want to contribute to a US IRA, you can still do that from abroad, but you still have to pass the same type of tests that someone in the US has to pass. So you have to have enough taxable compensation. Compensation can be US or foreign, but it has to be taxable. And so if you use the foreign earned income exclusion and you get rid of all your wages, so say that you have $50,000 of Danish wages, and then you use the foreign income exclusion and you exclude all of that from US taxation, then you have zero taxable compensation, so that you can't contribute to an IRA anymore. And then on the flip side, if you're married to a non-US citizen, and then you start having to file as married filing separately because your non-US citizen spouse is like, do not involve me with the IRS. I don't want to be on that tax return. That's really annoying for expats, because basically if you're married filing separately, you effectively can't really contribute to a Roth IRA, just because if you have $10,000 of income or more, you cannot contribute anything. And so in that case, what we would recommend is you do a backdoor Roth IRA conversion instead. And now I'm getting into like strategy and specifics, but those are common mistakes. So it's, W-2 withholding is not generally enough. So just that first year, you might end up owing US taxes if you have US and foreign income. The second one is not just taking the first expat tax benefit, but thinking a little bit about what you want to do while you're abroad if you are in a high income tax country. And that's where MyExpatTaxes, we do kind of have this optimization schedule of, okay, this is what your return looks like under the foreign earned income exclusion. This is what it looks like under the foreign tax credit. And then the last one is just, if you want to contribute still to an IRA, or if you're still doing US investments, just think a little bit about, how that works and your eligibility, and don't just, contribute without thinking, or at least file your tax return by April 15th so that okay, do I have to withdraw any contributions or not?
Speaking, you raised the IRA and some retirement income. Is for cases where, say, people decide to retire abroad, or maybe they have part of a retirement from the US, part from overseas, are there any special rules on, say, when you retire, withdrawing from a tax-advantaged account, whether it's a 401k or an IRA, where the original income was not taxed in the US, but you're drawing from a US tax-privileged account, but you happen to be living abroad?
So the US will still honor it, right? Your country may not. So that is something definitely you have to watch out for. Your country may not honor it. The UK will honor, like the UK is one of those few countries that will honor Roth IRAs, but most countries will not. With that being said, if you do draw from it on your US tax return, they will honor it, right? It's a US tax advantage account. Doesn't matter where you retire. If you're drawing from a pre-tax account, it'll be taxable. If you draw from a post-tax account, it won't be taxable anymore. So those benefits still exist on your US tax return. And then I think one thing else to note there is if you have Social Security payments, that is one thing that will change based on if you're abroad. So in Denmark, the tax treaty generally says that if you have Social Security payments, so Social Security can be Social Security benefits, it can be state-funded benefits from Denmark, right? So like government pension, that would generally only be taxed by the paying country. And so you can actually use a tax treaty benefit to say, this is my Social Security benefits, and it's only taxable per this country. And so that is something, that is expat tax benefit that's available to you. If you're dealing with company pensions, right? So if you have a Denmark company pension, that is still taxable in the US, but you can use foreign tax credits on it. So basically, you should not be double taxed on retirement income because Social Security, which is not generally taxed, is then covered by a tax treaty. Other types of pension, which is generally taxed, is covered by foreign tax credits. However, if you do have some tax advantage accounts in the US, I can't promise that Denmark is going to give you those same tax advantages. But the US will still honor them.
That's interesting. I think as people start taking that decision on, do I convert to a Roth? Do I go ahead? How do I handle tax up front or tax deferring? That could be interesting if you plan, say, an overseas retirement, that you may end up getting hurt by that both ways, depending how you do. Obviously, talk to an expert before you plan.
Of course, yes. And it's always tricky. I mean, it's hard to say, where are you really going to retire, right?
Yeah.
I know that most expats will generally not still contribute to a traditional IRA. They can. There are some. So, for example, if you're in a lower income tax country, those that are in Switzerland or in Singapore, they might still be doing traditional IRA contributions because they actually need the tax benefit on their US side. But those that are in high income tax countries like Denmark, doing a traditional IRA contribution will probably do literally nothing for you on your US tax return because you'll probably owe zero tax. So it's like, I owe zero tax, but here's another $12,000 deduction, right? So most expats in high income tax countries will tend towards a Roth IRA. But again, then the question is always on the local side. I can only say that, yes, you could still contribute to a Roth IRA, as a US citizen. If you get hit with the whole, modified adjusted gross income threshold, what you can do instead is contribute to a traditional IRA and then immediately convert it to a Roth IRA, and that's called a backdoor Roth IRA conversion. And then we help you do that super easily in terms of reporting it on our software, and your financial institution should handle the conversion. And that is basically how expats kind of like sneakily still contribute to their Roth IRA. But it's totally fine. Like, this is a normal strategy. I think if you just Google it, you'll see it everywhere.
It's not like it's a cheat or anything like
it's
that.
Not a cheat. It's
It's just a good management of money. Yeah.
Yeah, it is. It's literally, as it is called, just a backdoor way to contribute to a Roth IRA. The money still ends up in the same account.
In that note, are there other recommendations you have as far as optimizing the tax benefits, especially for
that are living in Denmark or elsewhere? I know one way may be like the child tax credit or other things. Obviously, there have been a lot of tax-based stimulus in the last few years that people, I think, can still claim this year. Can you speak to that a little bit, of things that we should know to optimize?
The first one is the stimulus payments. So basically, as we all know, the world shut down at some point. I think we're all kind of forgetting it at this point, to be honest with you.
It's been 5 years. It's
like, this did not happen. But remember, there was this whole thing called COVID. And back then, the U.S. government did give out stimulus payments. So the first two stimulus payments were done for tax year 2020. That's gone. You can't claim those anymore. But there's still one left. And it's $1,400 per taxpayer and per dependent that is claimed on your tax return. And you would have to file your 2021 tax return by it's technically by June 15th of this year, but I'm going to say by April 15th because now with all the shortages in the IRS, you have to paper mail this return. And so it's just, don't take the risk. If you want that $1,400, file Streamlining now. And you can do that really easily. I promise you on MyExpatTaxes, as easy as it gets, right, to file all those years. But you go through the Streamlining filing compliance procedure. So that's the stimulus payments. So if you want it, if you haven't claimed it for 2021, please do so by April 15th of this year.
Natalie, quick question.
Yeah.
Income limit on that, or is that unlimited income?
There is an income limit. So for single filers, that it gets phased out if you're over 75K. However, that's where optimization comes into play, because if we see in our software that, you know, you're over the limit, you can artificially lower your adjusted gross income with the foreign earned income exclusion. And so basically, if you're a high earner, you would probably end up on our software getting the foreign earned income exclusion. And so even if you have 100K, you would then basically be showing a 0 adjusted gross income. And then you get the stimulus payment. So obviously you can say, no, I don't want it. I don't think I qualify and I prefer not. We will honor that for you. But if we're talking about optimization, that is a strategy. The second one now is in the reverse. So if you have children under the age of 17 with a U.S. Social Security number that you can claim on your U.S. tax return, and you're living in a country like Denmark with high income taxes, you should be getting the child tax credits back and the refundable ones, which is now $1,700 per child per year. It used to be $1,400 and it's just kind of steadily been increasing. There's a couple caveats to that. You do have to have earned income, and earned income in this respect would generally only be foreign salary or some type of wages, just because if you have self-employment, it doesn't count because there's a totalization treaty and blah, 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 blah. But basically, if you're a wage worker in Denmark and you're paying a lot of income taxes and you have U.S. children, you should probably be getting a really big refund on your tax return. And if you're not, it's maybe because you are using the foreign earned income exclusion, because that would basically eliminate you from being able to claim it. And so you should be using the foreign tax credit approach. And so that would then be kind of the opposite strategy, where we wouldn't put you under foreign earned income exclusion, but we put you under foreign tax credit to get you to 0 taxes owed, but then also make you eligible for a refund. There's a lot of optimization. There really is.
Oh, absolutely. Yeah. There's nothing better. Taxes gives you a lot of out where you can find the right optimization depending on your unique situation and everything else, for sure.
Exactly. And I mean, I can get into more, but I just do the highlights. So, for example, if you use the foreign earned income exclusion, you still have U.S. investment income, and maybe you don't necessarily, report it in Denmark as you should, but technically you could claim the standard deduction against your investment income. So if you use the foreign earned income exclusion against your wages, so again, you have 50K of wages, you use the foreign earned income exclusion against that 50K. Now you have 0 tax, you have 0 wages. And then say you have $10,000 of US dividends, you can just use the standard deduction to offset that. So then you would pay no US tax on anything. And that's kind of this called capital gains harvesting, because you're using, the benefits to help you use the whole entire standard deduction against non-earned income. That's one. And then obviously if you start doing IRA contributions, or you want to contribute to your Social Security benefits, then there's different ways you would do your tax return. If you have student loans and you want to do basically a repayment based on your adjusted gross income, meaning you don't want to repay your student loans quite yet, you could then use the foreign earned income exclusion to get to a 0 adjusted gross income. So yeah, I mean, filing US taxes is annoying. I'm not going to try to sugarcoat that one, but I will say that there are benefits. And eventually, if you're in that space, in that mindset, and you want to start thinking about those things, you can definitely use your US tax return for this type of financial planning and as a tool to just ensure that, hey, you know what? I'm American, I do get to tap into different markets, and I do get to secure some type of retirement benefit from 2 different countries.
I totally appreciate all the complexity. I'm the son of a tax expert in this who.
Oh yeah, I mentioned my Christmas naps.
I even go back when I was younger. I helped quiz my mom on the different things with that as she was preparing for some of the exams. So I understand this completely. Another question on this that I think we've heard from people as well is people realize, oops, I didn't file and I should have, whether it's filing the bank account information or fully filing a return. Is there a limit on how far you can go back to file returns? Is there something that you can do if, say, I was abroad and I forgot to file in even 10 years back, you can go back and file those returns again, or are there penalties you have to worry about? How do you handle, say, past sins that you're trying to fix right now?
The IRS has got you covered. They understand this, and they have, this AMC program, which is the one I mentioned earlier, the Streamlining Foreign Compliance Procedure. And it's really easy, as easy as it gets. But even if you haven't been filing for 30 years, 20 years, whatever, it doesn't matter. You only need to file 3 back years. So right now you'd file back to 2021 only. So everything before that, they don't even look at anymore. You just file 3 back years of taxes, 6 back years of FBARs. And the benefit to the FBARs is you're thinking, well, I don't know my bank account information from 6 years ago. There is a checkbox on the FBAR form that literally says, I don't know my maximum balance. And so you could check that box. I don't recommend it for I wouldn't recommend it for the 3 years of back FBARs because you have a tax return associated with it. And there can be numbers that should kind of go over to the tax return. But definitely when you're filing your 2018, your 2019 FBAR, if you don't know the maximum balance, all fine, check the box, right? All they really need to know is that, okay, what's your account number? What's the financial institution name and address? And then I think that shows already that you're trying to disclose your information, and that's what's important. With that being said, yeah, it's really only 3 back years, and the IRS has a 3-year window refund policy. So even if it's your fault that you didn't file a tax return, you can still claim a refund within 3 years. And that's why it's important to claim the 2021 refund of the stimulus payments by April 15th. Again, technically the due date of that return was June 15th of 2022. So that's why now you have to claim it by June 15th, 2025. But again, the IRS can get a little bit picky about okay, is it the date that they received it or the date that you postmark it? And I won't even get into it, but I will, that you can literally give Austrian Post your mail and say, this is priority and I need you to postmark. They will mail it 2 weeks later. They're like, I'll get to it.
Yeah,
So
PostNord is the same way.
It's literally ridiculous. And so you cannot trust that. So do not wait to the last second because that's money on the table. And then the coolest thing about it is the IRS charges you interest if you don't pay them. But even if you did not file your tax return and they didn't know they had to pay you, if you have a refund due, they will pay you interest on that refund. So you'll get the stimulus payment plus a little interest on top. And so people, it's so funny, after they get the stimulus payments or these refunds from Streamlining, and then they come to us and they're like, we got a letter from the IRS for $50. Are they charging us a bill? I'm like, no, they paid you interest. It's interest. This is money that they're giving you. I mean, you have to file on your next tax return, but this is the interest that they are paying you because they said they owed you money and they didn't pay you on time. Interesting, right?
Right.
$50 is $50.
Exactly.
$50, $50. That's a nice dinner, right?
Now, I know we mentioned some of the forms. We had a few questions about, I think, is it the FBAR and the... Can you tell us about the banking forms that people need?
So basically, we're looking at FATCA, which is the foreign account compliance rule there. And what that wants is a double reporting standard. So I kind of start with the whole story of just you go to any bank in Denmark and you want to open a bank account. And they're like, sure. And then out of nowhere, they see your US passport and they're like, hold up, wait a minute. And they have these giant stack of papers for you to file. And then you have to say your social security number and you have to sign off all these disclosures, blah, blah, blah. Or they just kick you out. And either or. They're nice if they give you the stack of papers. They're like, just here's the door. Anyways, so that is because if these foreign institutions want to work with the US, they have to report all of their US's clients' information back to the US government. So that's reporting standard number 1. Now you, as a US citizen, you also have to report that same information to the IRS or the US Treasury. And that's why it's double reporting, because the financial institution does that, but you have to do it too. And so what then happens is if your combined maximum balances, so you have to calculate the maximum balance of each bank account, pension account, mutual account that's abroad, and blah, 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 all your foreign financial accounts, You have to figure out the maximum balance, which is hard enough in itself because the banks don't tell you that. You have to like look at your monthly statements like, okay, I think in May I had like 100 euros or more than I usually have in the other months. So you figure out the maximum balance and then you combine all of them and then you convert it to USD using the year-end treasury rate. If that's over 10,000 US dollars, the first form you have to file is the FBAR. And the FBAR is, like I said, it is your account number, it's your financial institution name, your financial institution address, and the maximum balance. What you think it is. It's okay if you estimate. It's okay if you're not spot on, right? Like just try your best. And then that's the first level. That does not go to the IRS. That actually goes to the Financial Crimes Enforcement Network, and that's e-filed to them. So you don't include that in your tax return to the IRS. The IRS doesn't want it. And then at MyExpatTaxes, we'll help you do both and we'll e-file it to the right place. The next level is if you have, as a single filer, if you have a combined maximum balance of over 200K, if you're living abroad, if it's a year you moved abroad in, then the threshold lowers to 50,000. But if you meet that higher threshold, you basically get to fill out the exact same information on a different form. So now it's a triple double reporting requirement. And that form is 8938. And that's literally the same information as your FBAR, except there's a couple more check boxes. And it just looks a little bit more intense because it's like smaller font.
They need to make sure that your money overseas is on the up and up.
You know, they actually do stuff with it. I mean, obviously, we're slim pickings. They're not looking at us, right? But I think just a few years ago, there were like the FBAR files or something. And it was like this whole money laundering scheme that they uncovered through filings. And like, Google it. Like, I remember I saw, it's like, I don't know if it's called the FinCEN or the FBAR, but like they do stuff with those. But they're not looking at us. They make us do it, but they're not looking at us. They're looking at, you know, some other expats out there.
Another question that we've gotten is, we've talked a lot about people from the US moving abroad and how they're treated, but we have a question from someone who's the opposite way, who's US citizen but never lived in the US before as an American parent. And if they're looking to come to the US to study or to work and take advantage of the US citizenship for the first time, they don't have a social security number. How do they get established with the IRS to be able to begin filing and legitimately being part of the tax process?
Yeah, so the first step is that social security number. I assume they have a US passport. If not, then that is actually the first step. But if you are over the age of 11, it is harder to get a social security number. So the first thing you want to do is you want to go to your consulate. So you want to go to your US consulate here in, Denmark. And then from there, most likely they're going to set you up with a contact of the closest federal benefits unit, FBU. Not FBI, but FBU. And so there, basically, you'll probably have to go for an in-person interview. So if you're over the age of 11, I'm pretty sure it's 11, you have to do an in-person interview because it's very rare that an adult needs a social security number because it's mostly only kids. So then you have to go through that hoop of, doing the social security number. Once you get the social security number, which can take quite a while, but, basically you have to just start the process, bite the bullet and do it. You get it, and then assuming that they've probably worked in Denmark, you'd go through the streamlining filing compliance procedure. So you would go ahead and start filing those back years so that you basically get a clean tax record. And you can do that. It's okay if your social security number is just valid now. You can still file back years using that social security number as long as it's currently valid. And then so you would file and catch up through the streamlining filing compliance procedure. And then you're all caught up and then you'd go to the US, right? I would just highly recommend that you get caught up while you're abroad because you can use the foreign version of the streamlining filing compliance procedure. What you don't want to do is you don't want to be stuck using the domestic version because in the streamlining filing compliance procedure for foreign, when you're really outside the US, you report everything. There are no late filing fees or penalties. But if you wait until you go into the US and you no longer qualify for the foreign program and you have to do the domestic program, you get a 5% miscellaneous penalty on the highest maximum balances in your foreign financial accounts. And I am not kidding you when I say that penalty gets real high. So really, if you haven't been caught up and you think you're going to move to the US soon, get caught up while you're abroad and don't wait till you enter the US to get caught up because the benefit is saving you really thousands of dollars there.
Okay. That can be a huge one. Let's say, you've been working for some time. You're not just a university student coming over. it basically says you need to get fully caught up just because you happen to be a U.S. citizen and you may take advantage of it to come to the States before you ever step foot as activating that to go work there. And that can simplify life a whole lot. Okay, that's super interesting.
So definitely, if you have to get caught up as an accidental American, do it when you're outside. Just because, yeah, once you get inside, they kind of think, hey, you should have been filing, you should have known this. Outside, maybe it's okay, you didn't know. But once you get inside and you didn't file, we have some people now that are coming out. They're like, well, I've been living in the U.S. for 10 years and I only had, a German company, or I had some German accounts, but I never filed my FBAR because I didn't realize. That is a 5% penalty on the combined maximum balances in those accounts.
Wow.
So that hurts.
How scary.
The FBAR is there a way, if you say you have the 6 years that you have to worry about it, if you don't remember what years you filed and didn't, is there a way that you can check to see what they have on record, or can you just send it again just to make sure if you're unsure?
Technically, there should be a way to look, but I will say that FinCEN support is not amazing. So, I mean, you can look through your email because technically you have to e-file all your FBARs. And so you should technically have a submission ID. So, but if you don't have emails, if you don't know, I would just do it again and you can basically do, you can just file it. You can check that it's amended and just put all zeros as the submission ID, which is a fine if you don't know the original submission ID. But I have emailed FinCEN before because we've tried to see if we can do this lookup for our clients, and they are just not very helpful. Like not, their support is
So
like.
the answer, sure, just send in the last 6 years. You know that you're clean, and the statute of limitations before that is gone, and that's the way to handle it.
Yes, and there is a separate program. So there's a streamlined filing compliance procedure if you haven't been filing tax returns. So that's tax returns plus FBARs together. If you have been filing your tax returns, you could just do the delinquent FBAR submission procedure, and that's just 6 back years of FBARs. You don't have to do anything with your tax returns, and that also gets you a clean slate on the FBAR side.
I know we talked about it a little bit when Natalie was on What Are You Doing in Denmark, when she was on the podcast. We got an email from somebody who was listening from, I'm not sure where from, but he said he has French and American citizenship. So he said, I hope you'll still answer from Denmark. I said, I think that's fine. But said he was on the fence. And we talked a little bit about how some people are renouncing, especially if they've never lived in the US before, like these accidental Americans. He said he was still on the fence, but he doesn't think at this point he'll ever want to go and work or study in the US. But he was really interested because he didn't realize some of the things we talked about. So I thought maybe it would be a good opportunity to kind of discuss again some of the things we talked about with the 5 years of being caught up on your taxes if you do choose to renounce. And I thought it was an interesting conversation. What would you recommend? We talked about it a little bit. If somebody is on the fence, they don't think they're ever going to take advantage by working or living or studying in the US, but they're maybe early in their career and still figuring that out. What would you say?
So once you renounce your U.S. citizenship, that's it. You'll never get it again. That's it. It's once in a lifetime. Yeah. So that's a decision, you have to live with. And that's the first one. So once in a lifetime. If you do want to renounce, they don't make it easy. They don't make it cheap either. So the first part is you have to be caught up. So you have to have 5 years of, tax compliance behind you. And that is kind of the first hurdle. So you have to go through the streamlining filing compliance procedure. Then you have to file still for, an additional year because the streamlining filing compliance procedure will only get you 4 years because it will get you 3 back years plus the current year. Then you have to wait and sit on it for 1 more year. And I think they do that on purpose to make sure you think about it. And then you can go and revoke. And then, so you have to go through that whole procedure. Once you revoke, you have to go to, your consulate, you have to revoke, you have to pay the $2,000+ whatever fee it is to renounce your U.S. citizenship. And then you have to file your final tax return. And on your final tax return, you have to then have this one form called 8854, and that is to determine if you're a covered expatriate, if you're subject to exit tax. So if you have, you'll basically do a balance sheet of your assets and your liabilities, and you'll figure out what your net worth is. So like, if you own houses, how much cash is in your bank account? Do you have cars? Do you have loans out? Do you have any other assets, investments, pensions, etc.? If you are over the $2 million limit for that, you are deemed a covered expatriate. And that means that you have to go through exit tax, which basically means you have to effectively sell everything. So you're not selling anything, right, in real life. But on paper, you would sell everything you have. So like any properties you own, you would effectively sell them. Any cars, effectively sell them. Any pensions, effectively get rid of them. And then normally you actually don't have exit tax because there's a really high exclusion amount of, close to 200K. So most people don't actually end up paying exit tax. I mean, obviously we have like, tens of millions and probably, but for the regular expat, probably not. But it's a lot to go through that process. Now, once you exit being a US citizen, if you ever decide to invest in the US, you'll never get to claim, you'll still have to file your tax return, because if you have US source income, so if you have money in a US bank, if you have money in a US brokerage, so dividends or interest income, or, maybe you have pension income if you were ever in the US at some point working, then that's still taxable. You just file a different form and you don't get to get any of the US citizen expat tax benefits. You actually just end up paying pretty much 15 to 30% flat tax with no credits and deductions. So that is kind of the exit tax procedure and what happens afterwards. The other part of that I would say is, obviously this is very emotional, I think, about your citizenship. What I just tell people is you never really know what comes in the future, especially as we see the news is just kind of crazy. I always say that, hey, I like the idea that I could live in Europe and I could live in the US, right? I have those choices, right? So I can live anywhere within the EU. I mean, I can't live in Denmark, but I can live anywhere in the EU. I can live in the US and any of those 50 states. And I think that that's really nice for me and my family to have that type of freedom to choose. On the flip side of that, my children, one day, maybe I don't want to work in the US anymore, but maybe they want to one day, right? And so I always like to keep that free. Obviously, you can still vote. If you don't like the way the US politics are, your vote still counts as an American abroad. And once you give up your citizenship, you can't vote anymore. But of course, I get it. It's, if you really want nothing to do with the US, hey, all fine, right? That's a decision, but it is still a painful process to exit, unfortunately. But of course, you can do that, rip off the Band-Aid, and then get out. And then if you really don't invest in the US anymore, then it should be over for you, and you should never have to deal with the US again.
I think there's 2 points that you've made, of course, across this as well that I think are important to say, which is if you're an accidental American, again, born abroad, have an American parent, or say your parents were expats in the US, you happen to get born in Texas and you move back and you're legally a US citizen, the way that you could do the streamlining process means that you can true up before you ever move to the US. So it's not like you have a risk that you have to worry about. And then it sounds like there's some different ways you can play, especially with retirement income if you're in a lower tax place, like you said, like a Singapore, like a Switzerland, where you may be able to minimize or eliminate your US tax liability with just some creative money management and how you handle stuff. So I think there's other ways to handle it than storming the embassy and throwing your passport at the clerk in the booth.
Not storming anything anymore. Hopefully.
We'll see. But I guess that comes once the next election comes around. We'll see if they're still storming the Capitol.
Right.
The US is so wild. I always say
I know.
It's really turning into like a reality TV show of like this season of America.
Yes.
Anyways, but that's not my part to dip into. I just touch on the US tax part.
I think to ask you as a tax expert is, as you hear things that are being debated, are there things that could be affecting people living abroad that you're hearing about in the various debates? There's a lot of discussion around having massive tax cuts in the U.S., changes in tax policies. Last time Trump had a policy where you got, I think, amnesty to be able to repatriate income as well. Is there anything that you're hearing about that could be of interest for Americans abroad to be aware of?
Yes, so the first one and probably the most prominent is there is actually a bill right now in Congress that is looking towards residence-based taxation. So this would allow people to actually opt in as a U.S. citizen to say that, hey, I I want to be taxed based on my residency, not based as a citizen. However, again, I warn you that it's never that easy, because even if this goes through, you'd have to basically go through a program to say like, hey, no, I need to true up. I want to then end up my tax residency. And then again, if you have U.S. source income, you do not want to be taxed as a non-resident. I just tell you that now. If you have U.S. source income, you want to be taxed as a U.S. citizen, because you'll end up most likely not paying any U.S. tax. But if you get taxed as a non-resident, you can expect to always pay at least 15% tax on your U.S. dividends, period. So, again, there's balancing, because if you're a non-resident, then maybe you don't have to pay tax on capital gains because that's not sourced to the U.S., but something to definitely consider. So that's the most prominent. With other things, I just say that they never really think about this normal expat when they're making these tax law changes. So when you're talking about the repatriating of company profits, this was actually transition tax. This hits normal expats really hard, because it's actually quite a lot of tax you have to pay on a company, and like you don't realize it until now. You have to do streamlining, then you owe $30,000 in 2017 plus all of the interest on top. So this one was tough. Another one that got eliminated the last time that there was a tax reform by this president was moving expenses were then removed, which hit expats because moving expenses were big in the year you moved abroad. Mm-hmm. They still exist, but only for armed forces and not for the normal person, right? So again, I'm sure there will be things that will happen. Whether or not that a normal expat will be considered, I guess not. And generally, this tends to affect us in a bad way. Another one, not talking about this presidency, but another presidency, we had, the introduction of net investment income tax. And that one really sucks, because that one is your 3.8% tax on your investment income, even if you have a totalization treaty with, your country. And that is where double taxation can come into play, because you can't use foreign tax credits on it. And then you get no benefits like Social Security benefits. So let's see. I'm always just kind of waiting. If they do impact us, they normally impact us in a negative way, not in a positive way. But, at this point, we kind of just roll with it. And as things come out, we integrate them into MyExpatTaxes so that, you don't have to think about it. But then we think, okay, well, how do we help still optimize despite the current rules that are standing?
I think one of the great things that you mentioned is as things are changed, it's rolled into the program. Obviously, with your background and also knowing what it's like to be an expat, you have a software that's specifically for us, because the other online services, they're not made for us. You can't file in yes. Filing in one currency, and just so many things that should be a lot easier are not made easy in the process. But that's another way that MyExpatTaxes, you come in and you tell us a little bit about what people can expect if they haven't used your service before. And we'll also, just so everybody knows, put the links in the description and everything that you're seeing, or you can feel free to DM or email us. All that information should be in the live stream as well, but we can get those links to you if you can't find them yourself. But Natalie, can you tell us a little bit about the service and what people can expect if they opt to explore things with you and make it a lot easier?
Yeah, so if you go onto myexpattaxes.com, you just create an account, right? You create an account, you go in and you say, I live in Denmark. This is my family situation. I'm married to a U.S. citizen living with me. I'm married to a non-U.S. citizen. I have children that are U.S. citizens. I don't have any children, et cetera, et cetera. You go in and you say, I have U.S. source income, like I still have a W-2, I still have 1099s, I still have K-1s. Or you say, I don't have any of that, and I just only have, foreign income. You can report, your Denmark salary. You can report rental income, self-employment. You can report anything, right? Paternity payments, family benefits that you get from Denmark. Like all of those things where you go like, do I report this? Answer is you report everything. Any amount of money you make, you report it. And then you put that all into our system in the local currency. And we will then convert everything to USD, because again, on your tax return, you're using the IRS yearly average exchange rate. On your FBAR and your FATCA forms, you're using the Treasury year-end rate, because there are just to add to the complexity, there are different rates to use. We put that all into a package for you, and you can choose. You can say, I want to do this all by myself. I want to be in the base plan. I don't want to talk to a human. That's fine. So that starts at 149 euros. You can also pay in, different currencies for that. You can say, I want to enter most of the information, but I want a tax expert to just make sure I did everything right and check over, look over my shoulder and just make sure, okay, everything checks out. So you can do that. That's the reviewed plan. You can also say, I just want to have a tax professional take over. I upload documents and I just let someone take over for me. That's our premium plan. And then, so you can choose those different plans. You can choose if you want to have a video call or not. So it's really, regardless of your situation, if you're simple in the case of you only have salary abroad, or maybe you're really complex where you have a Danish company, a limited liability company, you have Danish investments, you have PFIFs, right? So foreign mutual funds, all of these things, you can go in and use MyExpatTaxes, and you can use whichever plan best suits your needs. We still try to make every plan as affordable as possible. If you need to do streamlining, we have the most affordable rate for streamlining, and it is really pretty straightforward. You enter in your income, you see your draft tax return. If you are working with a tax professional, they get assigned to you within a few days, if not, honestly, within the same day. And then someone will go and start talking to you via email and helping you schedule a video call if you want, and just basically be there for you for your questions, for that process. And we know it's stressful, so we just try to make it as easy as possible. But of course, it's still tax. It's still going to be complex in some nature, but my biggest hope is just that we make the experience a lot easier to handle, and that there's someone that you can ask questions to.
And that's hard to find with
Oh God, yes.
either country and any software.
Yeah, that's the thing is we, as we enter this AI world, and it's so funny because we have webinars, and I've actually had comments that people think I'm AI. I'm not AI. But it's, it's kind of funny. We are still all human. And so also I say that too, is we're using MyExpatTaxes as we head into the April 15th deadline. Know that we're human, know that we're definitely, sacrificing our sleep to help everyone. So as everyone gets kind of cranky around that deadline, we are not robots, and we are here to help you. And we're excited that you're here. But yes, we're not AI robots either.
Fantastic. Again, we'll put all the information that people need. We'll make sure that we're posting it and getting it in people's hands. And we'll also have a link for a 10% discount to get started with MyExpatTaxes for those who are moving over and getting the help that you guys provide. The service is incredible. And today's been incredible, sharing your knowledge and answering these questions that I know everybody has. And making something, thank you, Natalie, for making something that's a little complex and serious, still fun.
Well, thank you for having me. And, I'm going to have to hop over to Copenhagen. Not now, because I know it's great, and I just don't need any more gray weather. But when it's sunny, I will have to come over. But I need sun. I don't need more gray skies at the moment.
Exactly.
Well, it'll be, hopefully you'll be here that weekend of the summer. Yeah. Summer here was a lot of fun if you were here that weekend.
Bye.
Natalie, and good luck for the rest of tax season.
Yes.
Happy Friday. Hi.